Welcome to your daily market briefing. Here are the key headlines shaping today's markets. 1. Nvidia beats across all metrics. AI capex cycle validated. 2. US 10% blanket tariff takes effect after Supreme Court invalidates IEEPA framework. 3. Japan PM Takaichi nominates dovish BOJ board members. Nikkei hits all-time high. After the headlines, you'll find a global market snapshot and a forward calendar of what to watch. Before we turn to today's stories, a short introduction. Daily market briefing. Think ahead, every market day. Subscribe to stay focused on what matters. Please keep in mind that all content in this video is for educational purposes only. It provides market context, not financial advice. 1. Trump escalates. 1. Nvidia beats across all metrics. AI capex cycle validated. Primary asset classes impacted. US equities, Nasdaq 100, S&P 500, semiconductors, mega cap tech, Asia tech, Samsung, SK Hynix, SoftBank, global equity futures, VIX. What happened? Nvidia reported Q4 FY 2026 revenue of $68.13 billion, up 73% year-over-year, beating consensus at $65.56 billion. EPS came in at 1.62 versus 1.52 expected. Data center revenue surged 75% to $61.7 billion, representing 91% of total sales. Q1 FY 2027 guidance of $78 billion exceeded $72 billion consensus, implying 77% growth. Why it matters. Nvidia's results neutralize near-term AI bubble fears that had driven a sharp tech sell-off earlier in the week. Strong guidance confirms hyperscaler capex commitments remain intact, validating infrastructure build-out. Yet after-hours shares erased most gains to settle up only 0.2%, suggesting elevated expectations are already embedded. This reaction signals the market is transitioning from beat and rally to prove the cycle sustains. Downstream, results lift Asia semiconductor supply chain and compress AI risk premia globally. Key numbers to remember. $68.13 billion. Q4 revenue, plus 73% year-over-year, versus $65.56 billion consensus. $78 billion Q1 FY 2027 guidance versus $72 billion consensus. $120 billion full-year net income, up from $4.4 billion 3 fiscal years ago. What to watch next? The muted after-hours reaction, only plus 0.2%, is the key signal. If NVDA opens flat to down despite the beat, expect crowded long unwind risk across semiconductors. Monitor hyperscaler capex commentary from upcoming Microsoft and Google calls. Salesforce and Snowflake earnings after Wednesday's close-add software layer confirmation. A sustained move above $200 per share validates further rotation into AI hardware. Failure risks mean reversion across the complex. 2. US 10% blanket tariff takes effect after Supreme Court invalidates IEEPA framework. Primary asset classes impacted. US equities, retail, industrials, importers, DXY and broad dollar, US Treasuries, 2 years to 10 years, EMFX, Brent and WTI, trade-sensitive European equities. What happened? A 10% global import surcharge under Section 122 of the Trade Act took effect on Tuesday, replacing reciprocal tariffs struck down by the Supreme Court on February 20th in a 6-3 ruling. The rate came in at 10%, rather than the 15% Trump announced Saturday. The administration indicated 15% would be implemented later. Section 122 carries a 150-day statutory limit. Why it matters. The shift from targeted IEEPA tariffs, up to 50%, to a flat 10% global surcharge reduces worst-case pricing but introduces new constitutional precedent risk. Section 122's 150-day clock creates a July 2026 expiration cliff that forces congressional action or rollback. A potential $175 billion refund cycle from voided IEEPA duties injects near-term liquidity for large retailers. Markets welcomed the lower rate, equities rallied and safe haven demand eased. But uncertainty over the 15% escalation path keeps risk premia elevated. Key numbers to remember. 10% blanket tariff rate, down from up to 50% under prior IEEPA framework. 150-day statutory limit before congressional approval required, expires approximately July 2026. $175 billion estimated refund pool from invalidated IEEPA tariff collections. What to watch next? Watch for White House timing on the 15% escalation and congressional response to Section 122 authority. Track CIT lawsuit outcomes, 2,000 plus pending, as precedent for executive trade powers. CBP refund processing pace determines near-term cash flow impact for importers. If Congress blocks Section 122 extension or courts intervene again, expect dollar weakness and EM risk on. Successful escalation to 15% reignite stagflation fears and pressures UST front end. 3. Japan PM Takaichi nominates dovish BOJ board members. Nikkei hits all-time high. Primary asset classes impacted. Japanese equities, Nikkei 225 topics, USD/JPY and JPY crosses. Japanese government bonds, JGB 10Y, 20Y, 30Y. Asia regional equities and FX. What happened? Prime Minister Takaichi nominated Toichiro Asada, Chuo University, and Ayano Sato, Aoyama Gakuin University, to the BOJ Policy Board. Asada is a known reflationist who supported ultra-loose monetary policy under aid. Markets interpreted both appointments as signaling reduced rate hike appetite. The yen weakened sharply, and the Nikkei surged to a fresh all-time high above 59,000 intraday. Why it matters. These are Takaichi's first BOJ appointments and telegraph her resistance to further tightening. OIS implied probability of a BOJ hike by April fell to 59%. The yen dropped as carry trade participants re-engaged on the view that rate normalization will slow. However, analysts note the board still leans hawkish even with these additions, limiting near-term policy shift. The signal matters more than the mechanics. Takaichi controls upcoming vacancies through 2028, including the governor succession. Key numbers to remember. 59% probability of BOJ rate hike by April, down from 70% plus prior to nominations. Nikkei 225 breached 59,000 intraday for the first time, closed at 58,715 on February 26. 2 of 4 upcoming BOJ board vacancies now filled with dovish nominees. What to watch next? Parliament must approve both nominees. Any pushback could modify the dovish signal. Monitor USD/JPY trajectory toward the 160 level, which has previously triggered Ministry of Finance intervention rhetoric. If BOJ delays hikes citing government coordination, JPY weakness accelerates and carry trades extend. The April BOJ meeting is the next key policy event. JGB 10Y above 2.15% would test fiscal sustainability narrative given Takaichi's expansionary spending plans. This global market snapshot is designed for quick reference. You may pause the video to examine the data more closely. This forward calendar section is designed for quick reference. You may pause the video to examine the data more closely. Thank you for watching today's briefing. In markets, understanding the field matters as much as making the move. And that's the perspective we aim to provide. Subscribe to Daily Market Briefing and turn on notifications to stay focused on what matters every market day.